Whoa! Wow. Look up ahead. Things are falling, and I think it's the banking stocks. Today, I'm going to give you a brief description of what's going on with all the craziness in the banking sector, but more importantly, I'm going to show you how to take advantage and profit from big moves like this in the stock market. Most of you guys have heard about it, but if you haven't yet, two huge regional banks have gone under. Silicon Valley Bank and Signature Bank, one located in California, the other in New York, both went under as the regulators and the government took them over as their cash flow showed big signs of weakness, showing that they might not have the cash that they have for their depositors that put their money in the bank just to have it there safe, like you are promised when you go into a bank. Now, both of these banks are decades old. Silicon Valley Bank being 40 plus years old. So when you walk into a bank in their 40 plus years and they tell you your money is going to be safe somewhere, you can usually trust them. But starting tomorrow, you want to have a different thought on these. If you lived through the 08 crisis, you might have already experienced something like this and a similar type of move. And most people out there learn to diversify. And that's the number one lesson that I'll talk to you about on this video. It's important for you guys to diversify your portfolio in anything that you do in life, and especially in your banking where your funds are at. If your funds start to rack up, the FDIC only insures up to $250,000 for depositors. So if you have over that, make sure to diversify your banks. Don't just go to one bank. Make sure to go to plenty of them. We have over 30 that we're going to show today in this video, so you have tons of options that you can choose from in the banking industry. We always recommend choosing the larger banks. There's only a handful of those, but those are usually the safer ones, and it's unlikely for them to go under, unless something crazy like the 08 housing crisis happened. But to pretty much sum things up, Silicon Valley Bank, SIVB, got in big trouble when the CEO and the owner showed it was selling billions of dollars worth of shares. Once people started to notice that, they started to really dive into their cash flow and balance sheet and notice that they no longer have the cash that's going to sustain the depositors that are there. With the high interest rates going up, it really affected the loans that were taken on by SIVB, and they were hurt badly, hurt so bad that the regulators eventually had to stop in after the stock fell about 80% in 4 days. Once the regulators stepped in, the stock got halted, and that started this huge bank crisis. Now, if you're wondering if your money's safe, yes, your money is safe. The president came out and made sure that all depositors' monies will be safe in a situation like this. They came and backed up and pretty much bailed out these banks. I don't really agree with bailing out banks like this, but this is what they got to do to help their depositors. There are tons of startups in Silicon Valley Bank, and we don't want to see our startups in America go under. So Biden stepped in, the president stepped in, and we are now going to fund the depositors. One important thing that you want to know is the bank depositors are safe, but the investors in the stock market are not. So if you do have shares of this stock, the stock plummeted about 80% the past couple of days, and it is halted. So you are not safe there, and we don't know where it's going to open up. Same situation in Signature, SBNY. So after these two banks got taken over, all the bank stocks got hurt, and that's how sector momentum works. And that's why it's important for everybody out there to have a master watch list for every sector. So today, I'm going to show you our master watch list of our banking stocks so you can be prepared for when an opportunity like this happens. Because when tons of volatility happens for day traders like us and stock snipers, we say volatility equals opportunity, and that's exactly what happened. As you can see with some of these regional banks dropping almost 80% or so in a couple days and then bouncing 100% plus in one day after that. So the opportunity is out there. Just to show you quick examples, we have FRC First Republic Bank. It fell from $120 to $17 in 4 days. From that $17, it was able to bounce to right around $50. That's 200% plus in one day. We had Western Alliance Bank, WRC, drop from $75 all the way to $7.46. That is a huge drop. Then it was able to bounce one day from 746 all the way to 40. That's a 400% plus bounce right there. And not only the regional banks bounced and had volatility / opportunity, also the larger banks did. We had Bank of America. Everyone knows about that bank out there. BAC dropping from 34.50 to 27.70 area in 4 days, and then getting a 10% bounce back to $30. Wells Fargo is another good example, dropping from 47 down to 38.50 in 4 days, and then a one-day bounce back to 41.50. So another 10% bounce. When there are drops in volatility like that, there are tons of opportunity to take advantage of. This is called a panic dip buy, and this is one of the 5 sniper patterns that we use to consistently profit in the market. So to be prepared for if a situation happens like this again, we're going to make sure that you have all these banking stocks ready and on one watch list so you can jump in that watch list and take advantage of the big movers. Here it is. We have about a handful of larger stocks, right around 7 of them are larger banking stocks, and then we have over 20 plus regional banks. So there are tons of options of banking stocks out there, all of them getting large dips and all of them getting small bounces in the next day. Now they are coming back down, so we are going to have more bounce opportunities in the upcoming weeks. So make sure to have this list ready for when we hear more news that comes out in the banking stock. The most important thing I want you to realize about this video is you want to make sure you're playing price action. Don't sit there and play the news. I know it seemed like the banks were going to go out of business and everyone was in trouble, but if you were buying when people were panic selling, you were able to take advantage of these 100% movers in one day. And that's the beauty about being prepared for sector momentum. Hopefully you guys enjoyed this video, and hopefully you guys are now strapped up with a list of about 30 stocks for you to take advantage of in the banking sector when that does heat up or when we do get those bounce opportunities. Remember, it's not as important to know about what's going on. It's more important about reacting to the news and playing the price action. Be a sniper, take advantage of it, and move on to the next. Learn, profit, repeat. Hope you enjoyed, and let's go make some money off these banking stocks. Peace.